Well, it's here. We're seeing a change and a shift in the housing market. We've got surging mortgage rates, record-breaking high rents, increased home prices, and the potential for an economic downturn. But the question is all of that true? So let me ask you this. Do you feel like you're being priced out of the market? Like if you're out there and you've never purchased a home or you're thinking about buying a home, do you feel like homes are just inaccessibly expensive for you? Do you feel like you're being priced out of the market? I'd want to know. But here's what's concerning. Why are homes so expensive? Why is it that they're not building affordable houses? I can tell you a couple of reasons here. One is the cost of the land, the affordability of the land. And secondly, they just outright kept the mortgage rates too low for entirely too long. Did you know that 62% of the homeowners that own a home in this country have a 5% or lower fixed rate mortgage? Now you're probably thinking, Wayne, what does 62% of people that own a home actually have to do with the price of houses and they've got to fit 5% or lower rate? Well, here's the deal. At the end of the day, people don't want to move. They don't want to move from a 5% rate because that's a phenomenal rate. It's just that simple. And then when you go to move, you're going to have to get a higher rate. And it's just not something right now people are willing to do. And as a result, we're seeing a low inventory of houses. We're seeing a need for houses. Right now, there is less than a 2.9% absorption rate of homes in this country. That means if not another home was placed on the market in the next 2.9 months, there'd be absolutely no homes for sale in the entire United States. Which leads me going back to sounding like a broken record. It's supply and demand. The demand for a house and houses right now is stronger than the actual homes that are on the market for sale. Now, you may have a house on the market that you've had on the market out there, and it's been on the market for say 50, 60, 80 days, 90 days, maybe even a year. But here's what's happened. Your home actually just went up drastically in its price without you ever adjusting the price, because the interest rates went up. You see, when people get a mortgage on a house and the interest rates go up, their payment's gonna go up. And don't get me wrong, 7.5% is still 93% better than if you rent. Because like I always tell people, if you watch enough of these videos, you'll know that when you pay rent, you're paying 100% interest because you get nothing in return. You're not building any equity. And one thing is for certain, I promise you, and I'm sure you'll agree with me here, we all have to have a place to live. We all have to have shelter. It just makes sense to own where you're going to live. But are we going to be faced with an economic downturn? Are we going to be faced with a housing storm, if you will? You can't help but wonder and scratch your head, well, is now a good time to buy houses? I mean, we're seeing not only interest rates go up, but we're also seeing homeowners insurance go up, especially if you live in a state that's around water. Which leads me to the question, are you in a state that's really close to water? I mean, I'm in Louisiana. I've lived in Tennessee where I was born and raised until I was 37 years old, and now I live around all this water in Louisiana. There's an alligator right over there. True story. But what if you live in, say, Ohio? What if you live in Indiana? What if you live in Wyoming? Are you seeing an increase in your homeowner's insurance? Because I'm beginning to hear that homeowners insurance in a lot of the interstates, not around the water, are seeing increased homeowners insurance. But my question is, why aren't they building more affordable homes? I hear from builders and I talk to builders and they say, Wayne, the cost of the land is really expensive, which it is. I mean, literally a third of an acre right here in southern Louisiana runs anywhere from $80,000 to $100,000 in a residential neighborhood. That's not a gated community. That community doesn't have a swimming pool. That community doesn't have playgrounds or anything. You get well over $100,000 if you want those features. And you heard me correct. That's just for the dirt. That's just for the lot. That's just for the piece of land to build the house. And then a lot of the builders are telling me, Wayne, we can't build anything less than $200 a square foot with it including the land. So think about that. That's why we're seeing more pre-existing homes being sold and going under contract, because you absolutely, unequivocally, for certain, can buy a pre-existing house right now cheaper than you can buy new construction. Now, don't get me wrong, I love a new house. There's something about a new house. It's untouched. Nobody's ever used the, went to potty town in that potty and all that stuff. But at the end of the day, you have to consider new construction is expensive. But here's something that you need to look at. As a new home is on the market and it's brand new, and that builder has not sold that property yet, they are more inclined, and we're seeing more builders pay for closing costs. We are seeing more builders buy rates down. We shot a video earlier today walking through a house over in New Orleans, and that builder said, hey, I'll buy the rate down. I'll pay the upfront interest for the buyer so they can get a 5.5% fixed rate. And I thought, man, it's things like that that you just have to be and get creative. So if you're out there looking for a house and you see a house, whether it's pre-existing or whether it's new construction, ask the seller to buy down your mortgage rate. That'll put you to 5.5% rate as opposed to a 7.5% rate. It's just another thought. Now, something else to consider, and there's that alligator. See, I told you, I wasn't lying to you. Something else to consider is closing cost. Typically, your closing costs are going to run you about 3.5% of the purchase price of the house. So if it's a $200,000 house, you just multiply 3.5 times, and it's going to tell you that's like $7,500. You can get the seller to pay all of your closing costs. And yes, if you need somebody, we have agents. I've got 88,000 real estate agents all around the country that literally work just like myself, and we work together to help our customers, our buyers, purchase houses, sell houses, and we get the closing cost paid by the buyer. Now, if you're selling your house, you need to offer those closing costs, offer those incentives. If you're a builder and you're selling your property, offer those closing costs, offer those buy down mortgage rate incentives, because that gets people to look at your house when other people aren't considering it. Now, here's something else that you need to do. When you go to look for a house, you have to know that any house that's out there can be purchased, and the seller can pay your closing costs. The seller can buy down your rate and it not cost you any money out of pocket. This is how you're able to purchase many houses with no money out of pocket. So if you're out there and you're looking to sell your house, you're looking to place your house on the market, before you do anything, have an actual person look at it. There's two ways to do that. You either have a real estate agent look at it and giving you a value. They won't charge you anything. If you need somebody, let me know. You can call me. Text me. We'll put our numbers in here, 985-626-1313, 985-626-1313. You can call or text us direct. We'll get somebody out at your house to give you a value of your home, what it's worth today, and there's no cost to do that. The other way is to have it appraised. Now, the appraiser will come out and give you a full report, appraise the property, and that's going to run you around $400. Either way, you just have to tell each person, whether it be the appraiser or the agent, that you're wanting the value of the home to either refinance it, or you're just curious, or you need to know what it's worth today if you were to sell the house. Now, keep in mind, once you know the value of your house, you're going to put your house on the market. This is really important to know. You have to know that if you have an FHA mortgage, that mortgage is assumable. So think about that. It's very advantageous for you to market your property to let any prospective buyer know that they can assume your mortgage. Now, they have to qualify. And once they qualify, you go to a closing, they buy your house. Your name is no longer on that mortgage. They simply assume your term. In other words, how many years are left on your mortgage, that note, and the rate. So as a buyer, that's a great way to purchase a property. As a seller, that's a great way to market a property. If you're out there watching this video, you have your home on the market, you need to be marketing, promoting, advertising your property with that adjustable rate mortgage. And if you're not, listen, now's not the time to be dinking around part-time, dinking around with part-time. You need a vetted full-time agent that is experienced in the business. I have 88,000 of them all around the country, and we make sure that your house is promoted in a way that buyers understand and buyers can see it, and it's beneficial for both the seller and the buyer for the property. You just have to make sure that you do your due diligence, you do your homework, you ask questions, and you make sure that you're comfortable with the person that you hire to be your agent on the transaction, the house that you're purchasing, or the house that you're purchasing, the house that you're selling. You want to make sure that you're not locked into any long-term agreements, and basically you can cancel it at any time without paying any money. It's your house. You hire an agent, you fire an agent. It's your choice.